Hi, everybody. I hope you're well. Welcome to this week's episode of Meet the VC. And today I've got the irrepressible Daniel Einhorn, a really good guy. And as you know, guys, the whole point of this, really, from my point of view, is to provide some insight, some education, and to provide some knowledge and some wisdom. And I think, without kind of putting too much pressure on you here, Dan, I think that we're going to get that in buckets today because Daniel knows this world really, really well. And I'm really happy to have you on today from Capital Midwest. Great to have you on, Daniel. How are you today?
Doing well. Appreciate it. Thanks for having
You're
me.
doing well. Yeah, no, it's great. It's great to have you, and I think that today what we're looking for and what everybody, kind of the founders and the founder groups are looking for that we're speaking to is just as much honesty as possible. And I know, and I know that from speaking with you, you are very honest, Daniel. So I know that we're definitely going to get that today. No airs and graces, and so I'm really looking forward to it. So without further ado, let's get kicked off, okay? So first things really, to kind of open this up, could you share a personal story or experience that's had a significant impact on your career so far within venture capital?
Yeah, so I've been involved in venture capital since 2008. Um,
Oh,
this really came at a very difficult time for me and my family. We were investment bankers for a long time. I came from the hospitality industry. And so we were raising money for these early stage companies as a broker dealer investment bank. At the end of the day,
yeah.
my daughter was diagnosed with leukemia at the end of 2007. And that really kind of changed my perspective and really try to figure out what I really wanted to do. And it was to help people. It was to help people like her and help people, all throughout the country that, if I could be of service, that would be great. So we started a kind of a socially responsible medical based venture capital fund at the time. And obviously there's been a lot of lessons learned, well after that. But at the end of the day, that was really the push that got us out of investment banking and into this world. There's several other reasons as well, but that's really the personal thing that happened with me that
Wow.
really triggered it. That I really wanted to go on a different path and do something that I thought was going to be important. So
Well, that's a really powerful story,
yeah,
and
she's
thank you
all
for
good. She's fully recovered. She's doing great.
oh, amazing,
She's a sophomore at
amazing.
Virginia Tech and having a glass. So yeah, but
Oh,
she's a
thank you, and
real
thank you for
sweetheart.
telling us that actually, because I think the first thing you think is when it's something so serious, you wonder, and you don't really want to ask either in case anything bad has happened. So I'm really glad that she's doing well, and to your story, I think that quite often really pivotal moments in your life from a personal standpoint reflect onto work and the work that you do. But just to kind of as a little addition, because I feel like it's going to really resonate with a lot of people. Um, why did this emotional turning point in your life turn you towards VC and helping founders, startup founders? Why was it that it turned you towards that from your previous investment banking direction? What was it about this
You're
that
right.
kind of yeah
Yeah, so while we were like raising money for these companies, we would, you'd head out to California, you'd meet with, other venture capitalists, and I kind of saw some things that were a little disconcerting, as you kind of go through this process. A lot of the people that we were meeting with are very bright and well knowledge, and they really know their market and how to do this, and I thought they were, probably unbelievably successful. But what was lacking is really the humility on the one hand, and the ability to relate to the people that they're going to work with. They're going to work with these founders, and there wasn't any empathy. There wasn't any, this is how I'm really going to help you with things that might not 100% relate to getting your product to market or getting it through clinical trials or whatever it was. but really be that support person of making sure they're doing the proper thing and doing it correctly, so that
Yeah.
they, it was much more matter of fact, and I'm smarter than you, and I know more about your business than you do, and this is how it is. And I really thought that the relationship between the investor and the CEO
Yeah.
needed a little bit of work, and that's really what I've really tried to focus on for the last 15 years
Yeah.
is on those relationships and making sure that we're doing things that are in the right way.
That's amazing. So we kind of understand now what motivates you to be in this market. What would you say that keeps you passionate about investing in startups? Because 2018 is a while ago, right? I don't want to kind of, cast any aspersions on our age, because I remember those days as well, but that's a while ago now. So what's kind of
Yeah.
kept you motivated all these years?
Well, I mean, you can see this is a great way to network. This is a great way to meet people and really ferret out those that you want to work with and those you don't. Right? So you get to see all these exciting companies. They're coming in. They have absolute passion for their technology, their what they want to do with their business, their team, and you can see which ones really care about their team, which ones really maybe not. But then being able to discuss with different entities all up the chain, from the partners that are going to help them get to where they need to be, to the customers that might want to utilize their product, and really be able to connect personalities and also do it in a way that is going to just much more successful. So, I mean, you take a look at someone's ability to initially contact and initially sell a product. And
Yeah.
what I've come to realize is it's just a relationship. They have to
Yeah.
trust you. They have to know that you're not going to be trying to sell something that they really don't need, they really don't want, but they could really use if you have developed that relationship over time. Because you get to some points and you're talking to a customer and he knows if you do this the right way. A lot of our really good actual sales have come from, we met this person, it really wasn't a fit for that entity, but you built up that relationship over time where he was
Yeah.
perfectly able, happy, and willing to send you off to someone that really would want to take a look at this. And that's
Yeah.
really what you have to get out of these. What are you actually going to get out of that meeting you have?
Yeah.
Are you really just focused from the time you walk in to the time you're out to get a purchase order at the end of that? Or are you looking to actually evangelize your technology in a way where you can make better contacts and maybe better customers?
Yeah. Yeah, amazing. And you talk so glowingly there about relationships, and I'd be really keen to understand kind of how do you approach building those relationships with founders, and what do you look for in potential investments related to those relationships?
Yeah, so our initial strategy is probably a little bit different than most, because once we get something that fits our basic metrics of what we're looking for, which is tech-enabled services or software with 1 to 3 million of ARR or revenue or whatever, right? That's pretty standard. A lot of people do that. So how do you take from there to understand which ones you really want to work with? And that's
Yeah.
where my meetings initially with the CEO, really trying to understand who I'm working with and if this is going to be a good fit both ways. Some people that
Yeah.
probably wouldn't want to work with a Capital Midwest or someone like us. But I start the relationship with look, you have some technology here, and that's really good. Congratulations, and you've done a great job of getting it to the level you are. For the purposes of what we're going to be discussing over time, we're going to assume your technology works, right? That's not a portion of this meeting. We're also going to really focus on the better you think your technology is, the less interested we're probably going to be in your business. Because once you get too focused on building that tech stack, you're really going to lose the ball on going to market and understanding your customers and building your business and building your team and building your culture, which is what we really care
Yeah.
about. Then you really have to focus on asking questions that they might not be prepared for, right? On this call, I'm pretty sure you can ask me whatever question you want, and I could be sleeping and probably give you something that would be a relatively okay answer. But you start asking questions that they haven't thought about, and a lot of my questions, the answer isn't really what I'm looking for. What I'm looking for is how he reacts, and then how he thinks about it, and how he, because he's going to be doing that in many other aspects of his business. When a problem comes up, is he knee-jerk reaction? Oh, that guy, he really did me wrong, and I'm never going to work with him again, or I'm going to sue him, or whatever it is. But if he's really okay, let's analyze the situation. Let's think about all the different aspects of things that can happen, and let's collaborate and figure out the best way forward, right? So I'm
Yeah.
looking for people who can critically think, who can problem solve. That's obviously very important. On the other hand, it's really also important to be with people who take accountability and responsibility in what has happened and where they're going. Admitting you made a mistake. We're living in a pretty polarized term, and I don't think we have good leadership that's really teaching those, to the general public. But really understanding, hey, look, I screwed up. I made a mistake here. This was
Yeah.
bad. I need to take accountability responsibility for that. And here's what I'm going to do about it, right? And
Yeah.
that's essential to where we're going.
And do you know something? That accountability, I think that is a huge. I think that is a huge challenge, and I'm not going to patronise people by saying this. I don't mean to, but I do feel that kind of the way the market was for a period of time, that's kind of this is that saying that like kind of. I think they talk about men, but it could be men or women, I guess. But weak men make hard times. Hard times create strong men. Strong men create good times. Good
Right.
times create weak men, and like that cycle. And I do feel that like the bubble that came about in sort of 21, 22, 20 to 22, when cash was getting deployed, I think that the damage that did across the board was made people blasé about money, made it, there's this mentality that you could just chew money up for however long it took until you got to profitability. And something that I'm constantly talking about all the time is to founders is you don't necessarily have to have profitability, straight away. We understand everyone understands that might take time, but actually, having the resilience and the ability to kind of push through and draw a line to these things and be more thoughtful, I think is just so important. And those characteristics of people, of human beings, are so essential for anybody that's been invested in, because there's nothing surer. Like I'm 40. I'm actually soon to be 43 years old, and I've made so many mistakes, like so many mistakes, it's definitely your ability to overcome those and to move past them and not to hold on to them, which I think is so important to founders.
Right, and look, it's great to have optimism. It's great to really understand what you're doing and love your product, and love your business and what you're doing. But sometimes you'll see a board deck and even go to the board meeting and it'll be like really positive, right? We're just going to talk about all the highlights and everything great that's happening here, and that's great. We should do that. We should celebrate the things that are going really well. But if you don't actually turn then to, but we have a couple issues here, and I want to kind of discuss them with you, just kind of talk them through, and let's see, if this is a solvable thing or is this a really big problem that we're probably going to need some support for. And
Yeah,
that happens sometimes, but you have that. But that's day one of our relationship, is having that CEO have the trust in Capital Midwest to really work through those issues,
yeah,
and be comfortable coming to us and saying,
yeah.
"Hey, look, this is what's going on here. I just want to, this is what's happening. I want to let you know," and
Yeah.
go from there.
Yeah, I think that's really, really important, and I think kind of moved me on to my next question, really, which is kind of, can you give me an example of a time where you've helped far beyond the money? I'm sure you've actually got tons of these, but in terms of like a specific, obviously you can't name the companies or the people, but a specific example whereby there's been a problem and it's not just about the money that you've provided, but you've been able to, that you've stepped into that breach, so to speak.
Yeah, I mean, look, a lot of this is personnel,
Yeah,
right? And this is really where a lot of the challenges come in, is you can have a team come in and on paper, God, they look great, but they're just not a good fit. So we had a situation with one of our companies in Madison. They were in the waste management field, and we were going from kind of a tech-enabled services platform to a true SaaS platform. And they brought in a team led by, a guy from Google. And he brought in, some people to really kind of help him out and really build the platform. And, he was a very important part of that company, right? They had brought him in to really make sure that this tech
Yeah.
stack was perfect and working properly. And over time, the CEO was not comfortable making a change, which he really had to do. Right, this was not going to work. This particular person, he just wasn't going to build it in the proper time and the amount of money that we had in order to get just that product out into the market and really start
Yeah.
evangelizing. Let's start, getting version one out there, so then we can get feedback from the customers, and now what your Substack's going to look like in the morning when you're talking to people of what we're
Yeah.
building, you know. And so those were some long conversations. And after the board meeting, I had to go out with the CEO. We just had dinner, and we just kind of talked this through. I'm like, look, you hired this guy. We paid him a lot of money. Venture capital, there's sunk costs in venture capital, right? And so
Oh,
are you gonna conglomerate and make more mistakes? Throw another bad decision after a bad decision, or are you gonna really kind of make some pivots and some changes that are gonna lead to something more
yeah.
productive. So that was an important part of that company, and we had to downsize from 45 employees down to 29, hire some very local people. Let's just get that version out there. Let's see what the market says, and let's move forward. So while that wasn't a typical money thing that we put into them
No.
to help support that, that was something that company just had to do, and just kind of
That
give
is,
it a comfort that
that is
this
a
is this is
great
the right decision.
example. That is just a great example because I agree. I think that that is a huge point, and I think that so many of the founders that I speak to talk about, that challenge of feeling a little lonely in that scenario and not really knowing what the right thing to do is. And I think the ability to have somebody in your corner, the VC in this case, you guys in this case, who can take them out for dinner and say, really, this is the job. Like we've got to get this right. So yeah, absolutely. I think it's really really good advice. And I think you've talked a little bit about this, but I just want to really clarify it really. But what do you think sets you guys apart from other firms? And obviously you don't need to talk about those firms. And how does that benefit the startups that you work with?
Yeah. I don't know. I mean, like, look, we don't have a better network than other VCs. That's not what it is. Yeah, I think it's really the focus from right from the beginning of every conversation we're going to have is going to long term value. That's what we're looking for. What decisions can we make that's really going to help out in the long term? And also really having that open, honest discussion at the beginning. We're like, look, we're going to make this investment, and then I am going to turn into your employee, and I am available 24/7 for whatever you need, whatever you ask me for. I will do my best to get done. But this alignment of interests. We've had a couple issues with that very early on in my career that you just can't. Those are unrecoverable from. If you have a misalignment of interest, you're just done. So
Yeah.
it's really more of making sure that his time is well spent. He knows when that phone rings and it's me, that I have something for him that's going to help his business. As opposed to, hey, look, I need this chart, I need this data, I need your LTV to CAC ratio is a little low, so let's really work on that. It's really not about the different KPIs and making sure they're up. That'll work out in time. If you perform, your KPIs are going to look pretty good, right? But really badgering a CEO, because he's not giving you what you think you need. Look, if he gives me, and everything that he gives me, he should need for his business as well. And
Yeah.
that's really kind of essential. And then look, you go to board meetings. People know me from board meetings. I'm not there to talk. I'm not there to hear my own voice. I'm there. I'm prepared. I know what's going on. I talk to the CEOs outside of board meetings if something really big's coming on. But that's really for him to really present his case, and we'll let the other venture capitalists hear their own voice and talk, and see what important thing they have to say in order to kind of get things through. There's some that are incredible, and some are really in a spot that they probably shouldn't be in.
Very well navigated there, Daniel. In, in your opinion, what are some of the biggest challenges that startups face when raising capital, and how do you help them to navigate those challenges?
Yeah, I mean, first of all, a lot of startups probably get, you know, different advice from different people of, how, first of all, if it's something that actually is kind of interesting, maybe tell them how great they are and, they really kind of want to get into this and maybe they're not giving them the proper advice of when to raise capital, how much capital to raise, how much runway you actually need. A lot of, I've seen it both ways where, the startup will raise 12 months of cash, maybe
Yeah,
even 6 months of cash, because they're just on the verge of getting that customer and that's really going to drive the value. What I think that one of the bigger mistakes you ever see is the amount of equity these startups want to maintain and when they want to maintain it, as opposed to making sure taking some of the risk off the table by having more capital on their balance sheet in
I
order
agree.
to make sure that we have to prepare for hiccups all the way throughout of what's going to happen from now till then. So look, if you have a $5 million round and someone else wants to invest and makes it a $6 million round, you should probably take that.
I
That's going
agree.
to be worth your while. I mean, the dilution to the founders is going to be minimal. And if you guys are really good and the next round really wants to support you, that whole thing's going to be readjusted anyway. There's going to be a new employee option pool, that's going to come in that Series B round, and you're going to be made whole, right? So
Yeah,
whatever you give up, you want to give up a little more than you probably are comfortable with. I'm not saying from me, but from
yeah.
other investors that have come in. And just really
That
make sure that you have the capital to take some pressure off, right? Because you really, you've probably been struggling and, worrying about payroll forever, or maybe you're not even paying yourself. And, that's really where I would advise you
yeah.
can never take not enough money is a problem.
Do you know something? Like, we haven't talked about this specifically, but that is literally the conversation that I have all the time. The number of conversations that I have where, we're talking to potential clients who are looking to raise capital. They're very specific about the percentages. I don't want to give any more than 12.256%, and I don't want to do this and I won't go past this point. And I'm kind of like, and sometimes I feel I don't want to, I don't want to discourage their verve and the way they feel about things, but I try to kind of say, like, if this is what we think it is, if this is what you think it is, then that 12.26% to a 15% or a 17% is neither here nor there for you personally. And more importantly, and a very dear person to me said this 2 years ago. He sadly passed, but he said, "Businesses don't fail; they just run out of money."
Right.
Yeah,
I think it's fair. Yeah.
businesses don't fail; they just run out of money. And if
Yeah.
you've got, like, there's lots of ideas out there that aren't really businesses, in my opinion. They're just cool. Like, I get pitched to all the time. I'm sure you do. And a lot of the time, they're just cool. It's just cool stuff that nobody's ever going to buy, right? So it's not a business. It's just a cool hobby.
Yeah.
Sometimes, and we have to give that feedback. But when you have a business, something that works that people want to pay for, those things, they don't fail. They just run out of money. And if you had more runway, you probably would come out of the back end. So I agree with you completely. We've been involved in rounds where, like you say, it's been a bit oversubscribed and they could have took an extra 2 million or whatever, and they haven't taken it. And in fairness to those businesses, some of them have capitalised greatly off the back of that. Others have, I guess you could say, failed because they've been unable to then keep up, and they've had to maybe get bridges in the end, or maybe one or two of them. We weren't working with one of the two of them. I believe are no longer in existence. So, but the key really is here is if you do have money on the table, realistically, unless like there's a Dracula offer and you kind of giving away the crown jewels for it, then I
Right.
think I
Oh, for
agree
sure.
with you
And
completely.
that happens too. But yeah, and
Yeah,
that's I think that's the most important thing. There's several other things that startups really need to understand, when they're pitching. If you're a startup and you're pitching to me without asking me a question, That's really a sign of you're not really thinking things through, right?
Yeah.
If you don't really care of who's giving you money as long as it's a check, there's a lot of bad money out there. There's a lot of people that you really don't want on your board. You don't even want on your cap table because if a
No.
problem comes up, they could be really hurtful to your business, or they might not support you later on. There's so many other things. So asking questions and having this a conversation as opposed to a presentation is something that you kind of look for.
No, I
And
agree
then,
completely.
and then look, we understand there's challenge. You just grew something from 0 to 1 million. Yeah, you went through some hurdles, right? So walk us through that. What
Yeah.
really, what was what got you over the hump, and what was the thing that was holding you back, in time. If it was capital, it's capital. That's fine. Just be open and honest of what it is, and then don't promise things that you have no chance of delivering. Right?
Yeah.
That happens an awful lot. You'll see some of these forecasts going forward, and you're like, yeah, honestly, you don't really need to build this into a $50 billion company.
Yeah.
We're investing at about a $10 billion valuation. If we can get this up to 50, 100, that's probably going to be very good for everyone. So why don't we start there? And if we get it to that, and that's happened. But I
Yeah.
don't need to see that day one. Like,
No.
oh my God, I'm going to miss this opportunity because it's like a 500x. I'm like, oh, all right,
Yeah.
well.
Amazing. Amazing. And I mean, just kind of moving away from those guys and a little bit more towards you, Daniel, now. But how do you stay informed around emerging trends and industries to identify the most promising investment opportunities?
Yeah, I mean, look, there's reading you can do, but and that might be slightly biased, slightly. I'm not really sure I agree with all of it. I'll read some publications and the news of what's going on, but then it's continuously meeting people and talking on the phone and asking them questions. What are you looking at? Hey, you're more of an expert in cybersecurity. Just tell me what's going on in that field. Finding out, and a lot of my conversations like that aren't even people in the venture capital industry.
Yeah.
They're like leading indicators that are really going to show you where this is going. I was just out with a buddy on Friday night and just talking through his business, and I learned so much about supply chain, what's going on with these hurricanes, how that's going to affect stuff, stuff moving from China and back, how that's really going to affect the economy, because he's an absolute expert in that, and he's been doing this for 20 years, which I can't know that from getting the publication that I'm going to read. So you really want to build your network up as much as possible, and then when you're with them, have them talk. Ask them very open questions, and then everyone loves to talk about their work, right? So they'll be very open with, oh, I can talk about me. I mean, how many people do you know where you have this conversation, you're going kind of back and forth, and they're like, well, that's really good. Let me talk about me, and you're just like, gotcha.
Yeah, it's so true. But do you know something? Something that I say quite a lot, which is I believe this because I guess by nature I'm a community builder, but I say all the time that network equals net worth, right? And I genuinely believe that. Like, there's so much of this stuff that flies around that kind of says, that you are the average of the top 5 people that you spend the most time with and all of that. But I genuinely do believe that if you have a great network and you have a great group of people around you, or a skill that I think I have, like, I don't feel like I'm the smartest guy in every room. Far from it, right? But I do feel that I have the ability to listen to something and think, Daniel will know that. Like, I'll speak to Daniel about that. He'll definitely, he's from there. And I'll just like shoot you an email or shoot you a text or whatever and say, hey, Daniel, is this something you know? And like, sure enough, like you say, 9 out of 10 people are more than happy to talk about stuff that they're interested in and that's to do with them, right?
Yeah, it's really that's really the bit. That's what I love about it too.
Yeah.
I can talk to anyone.
Yeah.
There's so many different ways to go about this, especially for a vertically agnostic firm like us, where we're invested in anything. Outside of healthcare, we're very open to different industries, right?
Yeah.
So I can call up one of my fraternity brothers that works for a rental car company, and he really helped me out with this latest investment we made in this company that helps fleets get repairs done. He told me things that there's no way I would have been able to figure that out.
You would never have known.
Yeah.
Yeah. So come on then, in all this time, since 2008, there must have been, and again, you don't, please, obviously you don't have to name anything, but I'd love to know this story. Um, can you think of a specific investment that went wrong, that didn't go as planned, and what you learned from that one?
Hmm. Yeah. Right. So I would say the project I worked on more than any other project was a company here in Milwaukee. It was called OnCall, ONKOL. And basically, what it did is it took all the peripheral devices from mom's house and communicated it through their box so the adult kids could look after mom and dad.
Right.
And I thought it was a great idea. Oh my God, what a market! You're gonna let them live at home, and you can still monitor them. And we had just so many challenges of just getting version one out. It just it always had to be tinkered with. We have to make this improvement, and the development time, not even expense, but just the things that were being added and having new features. It just took forever, and then by the
Yeah.
time we had version one, we ran out of money for an inventory run, and no one really wanted to invest in a company with zero revenue that took 4 years basically to develop, this box that really should have been something. And we just made a lot of bad decisions all the way through because version one out, get some customers, get some feedback. That's really what should have happened. But it really never did. We were trying to go more B2B as opposed to,
Yeah.
just individuals, and it just didn't work out.
Yeah. And of course it happens, right? And people just got to bounce. You've got to bounce back from those challenges. Um, what advice would you give to early stage founders who are looking to raise capital for the first time? Give us your
Yeah.
top three tips.
Number one, I would start early, right? Start way before you even are thinking about you actually need the money, right? Talk to people within
Yeah.
your network that have invested this money. And actually, the best thing to do is to talk to one person in your network that is not going to invest, right? And then you can get unbiased feedback from that person of how your pitch is and how it resonates from the investment side. So if,
Yeah.
if you have someone that is really an expert in this and you can talk to, without having the feeling of hey, I really need you to invest. I
Yeah.
really need your $500,000. That can really give you a lot of feedback that
Yeah.
you're not going to get. You go to a lot of firms, you present, you leave that meeting, you're like, oh my God, I did so well. I got my point across. That guy, he asked good questions. I think we had a rapport. And then you try to call him in a week. Hey, what'd you think? Oh, and you might talk to him in a month. He wasn't interested, and there's a reason for it, but you'll never find out. So we had one where, I mean, clearly I mentioned my daughter, and so there was a company here. And basically, what they had was a pill where it was candy basically. We would put the medicine in, made it much more easier for her, to swallow her medicine. And obviously, this is something that in theory I would love, right? This is something that's very
Yeah.
giving no
Really
kids.
close to your heart.
Oh, and so we had the presentation, and there was so many issues with this company. You just knew it wasn't going to work. And the guy called me up a week later, just assuming that I'm ready to talk about the term sheet and the test. I'm like, well, look, I'm not going to be able to do this. This is not really where. But I really do like what you're doing, and I just went through. I had a list of 8 things I wanted to talk to him about that he really did need to work
Yeah.
on before he went back out into the market. And I think I got to the third one, and then all of a sudden he hung up, and I'm like, oh, okay. So you're not even willing to hear advice. He was so disappointed that I wasn't investing, and I was
Wow.
like, this is just not going to make it.
No, that is crazy. Do you know something? I mean, I don't want to derail it because I'm still waiting. I'm going to hold you to number 2 and 3 on this. But do you know something that I talk about all the time? And this is I've learned this lesson myself, right, in the hardest way, the harshest way, with my father when we started our first business, and that is always exit a relationship in a good way. Always exit, right?
Oh,
So even if you're absolutely furious with that scenario,
mhm.
always leave it in the best way possible because you never know. Like, it could have been that the week after something had happened and you'd gone, actually, you know, I'm going to give this a go. And all that guy actually had to do was just hear you out and be a good human and, you know, do those things that, like, that should be natural, right? Or it might have been that you were never going to invest, but then the week after you'd have been speaking to one of your buddies and who was in this space, who wanted this, and said, "Oh, you've got to speak to this company." The guy listened. I gave him an 8 point reason why I didn't want to invest in him, and he was so like humble, and he was so great, and he listened, and since then he's been back to me on 3 or 4 of the points, and he wants to. And I really do think Steve or whomever, Kate, I think you should invest in him because it's perfect for you. Like, he's never going to get that recommendation. It just blows my mind, that it really
Yeah.
does.
Yeah, and on the other side too. I mean, it's really important. Like when I talk to, my syndication partners, to level with them as well. We had one of my syndication partners, one of my companies that actually, we were raising the next round and sent him the deal, and there was so many issues with this company. It wasn't going to work, And so he called me and said, "Hey, what do you think of this company?" I was like, honestly, his name was Paul. Paul, I actually want to work with you in the future. I think we can keep on building our relationship. I'd recommend you pass on this one, just because it's really it's not going to happen.
No.
This is going to be a bad investment for you. And even though if you would have invested, that might have saved the company for another year, it was not going to be a good decision for them to do that. So,
Wow.
you have to look at like what's good, not just for you, but what's overall good. And that'll come back.
Yeah. Yeah. And serendipity is huge. So come on, what's number 2?
For our founders to pitch?
Yes.
I would say a shorter, more open-ended presentation is much better.
Okay.
Right? And look, if you find an investor that's really interested, you're going to go through everything. He's going to want to do all the due diligence. He's going to find out, everything that you need. That first meeting is really just the high points. Really, what did I do? How did I get here? Where am I going? And how I'm basically going to do it, right? So spend a lot of time on the basics, so he gets a comfort with where you're going with this, and all the other details will come. I mean, I'll get a 40-slide presentation.
Yeah.
It's like, okay, because how do you get out of that? Let's say it's something I really don't want to do. I don't want to go through all 40 slides. I want to cut it off after 5. And I used to actually have that in a bad way, but
So we've got
I had
number
something.
1, start early. Number 2, a shorter, more open-ended presentation, and the third tip for founders.
It's really understanding your team and what they are able to do. And if God forbid something happened to you, that you are comfortable, that you have developed a team that can support you if you want to take a week vacation. If are you micromanaging everything to the extent that no one can work for you without him taking some accountability, him taking some ownership? You really need to figure out if you've built that team. And you know what? Maybe you haven't. Maybe you're just the founder and you have a couple 23-year-olds doing code for you, right? But how are you then, when this money comes in, bring in that other COO or, chief revenue officer that's really going to take some weight off your shoulders and really have your vision and be able to work with you, not just as a yes man, but someone that's going to push back on you. Having someone that's going to push back on you on a daily basis is healthy.
Yeah, that's amazing. So back to team and back to those capabilities. Final question from me today. How do you envision the future of venture capital evolving, and what implications do you think that will have on startups and the overall investment landscape?
Yeah. I think venture capital is already kind of going in the way of a lot of other industries where there's absolute dominant market leaders.
Yeah.
And it gets a little more and more, because it's unbelievably challenging to get started and to raise that fund and to get going. So I think there's going to be fewer and fewer smaller firms that are going to be in the local areas really supporting out, and it's going to be dominated by people who are writing bad checks, not or large checks, and
Yeah.
kind of taking over. I mean, you see what's happened over even during this bull market that we had. You know, you had SoftBank come in and just deploy. Oh my God, I don't know how much money, and then Tiger came in and did the exact same thing,
Yeah.
and it's going to happen again. And these larger firms in California have made a lot of money. They've done great, and they're just going to get bigger and bigger. The ones that didn't do well will probably consolidate in. So I think there's going to be fewer firms, just as much capital, but fewer firms, larger checks, bigger bets, and I think that's where we're going.
Oh, that's interesting. And how, I mean, the second part of that, it's a really interesting point, actually, and one that hasn't been raised before. So it's just making me think. But what do you think the implications of that are? Sort of the winding down of the local VCs almost, and
Yeah.
kind of, what are the implications to the market, to the, to founders for that?
Correct. Hopefully, I think there's going to be like hubs.
Yeah.
I think there's going to be certain areas that have kind of done it the right way and kind of built up their ecosystem enough where they have the ability to attract more people into it. There are certain cities here in the Midwest that are terrific, and other ones that are just kind of struggling along, and they haven't really
Yeah.
gotten the ecosystem built in order to kind of support this. So, I mean, Austin, Texas didn't even exist,
Yeah.
years ago, and then all of a sudden now it's a huge hub.
Yeah.
So there's in Nashville, Tennessee was not anywhere where people were looking, and now it's really grown. They've done a great
Yeah.
job. Louisville, Kentucky is doing terrifically. Indianapolis is doing great.
Yeah.
And then there's other areas that I don't know how it's going to shake out.
Do you know what else? What I'd like to throw in the mix here is I think the world itself is closing in, and I think that, like, for example, I mean, I'm headed out to Dubai on Sunday for a tech investor conference, and I've got some real nice meetings set up there with some investors and some sovereign, certainly linked to sovereign investments. I've also been able to secure some meetings in KSA and Abu Dhabi. And I think that if you look at the growth and the movement in those regions, I think it's going to be interesting from a VC point of view and an equity point of view to say, not only, I mean, off the back of what you're saying there, that there's going to be kind of like a streamlining of this, where the bigger firms are going to be in hubs in the cities. I also think for the first time ever, and I don't know if you've heard much about this, but I've been working in the US now for probably 7, maybe a bit longer, 8 years. And it's the first time in the last 6 months, really, I've had a number of US companies come because of the landscape, who have come to me saying they're completely willing. They've looked at the MENA region, that they can see the alignment, and now you've got US companies looking to relocate into Dubai, into KSA, into Abu Dhabi, and set up there and raise there. Have you got any thoughts on that kind of decentralization thing, Pat?
Ugh. No, I mean that I can see it happening. I have not heard anything to that realm,
No,
but I mean that would not be a surprising outcome
no,
for some here. If we continue on this, regulatory path that we're on, labor is really expensive here.
yeah,
Regulations are too many. I mean, they could probably
yeah,
rip up 2/3 of them, and we'd be okay. Let's
yeah,
focus on the regulations that really need to be regulated to making sure that there's no bad actors. But some of this is oppressive, and I can
yeah.
see someone wanted to kind of get out of that stage and go to a place where they can just really focus.
And do you know something, that is a genuine conversation that we're having. Like I say, we're speaking to between 20 and 40 founders. Like we recently engaged with a South Asian country and their tech ecosystem, and we had some pretty in-depth conversations. I don't want to kind of name them; it's probably a little bit crass of me to do so, but basically, what came out was that kind of the sway within their kind of portfolio, let's say 2,000 companies, 90% of those a decade ago had dreams of coming to the US. 90%, right? That has moved like
Wow.
like 5% by 5% by 5% every year, and this year, only 50% of them want to come to the US. Um, Only 50%, so only half of those, and the other half were looking predominantly at MENA. Some of them were looking at some of the emerging African ecosystems, but I think that there is a wind of change, and without kind of going, well, we could talk about this all day, but I just feel that like maybe you're right, maybe that that America needs to look at this and think, how do we kind of wrestle this power back? Because at the moment, I do feel there is definitely a weakening on that grip. There is, without a doubt, from what we can see. So
Yeah.
interesting.
Yeah, that's fair.
Yeah.
Good.
Amazing. Well, listen, Daniel, it's been an amazing conversation. I've made some notes as well about some specific points. Thank you so much for your honesty. I knew that I'd get that anyway, and I'm sure that people will love this. Guys, if anybody wants to get in touch with Daniel and the team, there's going to be lots of polls and stuff going out over the next week, 2 weeks. And if you want to come direct into us, we'll connect you with Daniel and the team. If you want to go direct to Daniel, he's going to be on our LinkedIn and contact details. Daniel, is there any specific way that you'd want to be, contacted?
No, I mean, most people
Usual.
contact me once they get to know me on my cell phone. That's kind of where I live off of. So,
Amazing.
um,
Amazing.
once you send that poll out, if someone wants to contact me, give them my cell phone number, and they can give me a call.
Perfect. I would expect nothing less. Have a wonderful rest of your day, Daniel, and we'll be in touch soon. And guys, have a wonderful rest of your weeks also. And let's go and do this. Thank you. Take care.